Big news from the Federal Reserve yesterday as interest rates go up a quarter point with more increases expected in 2023. What does this mean for the real estate market? How are interest rates directly tied to what's happening with home prices? And fundamentally, is the market healthy? To understand where we are today, we need to dig back into the past few years. When the pandemic started, people rushed to buy homes. We had more buyers lined up at open houses, multiple offer situations on every single property listed, it felt like, because demand was there. Interest rates were exceptionally low. Some people locked in below 3%. I bought a condo at 3%. There was a time where money was cheap and buyers were operating in droves. And as that demand continued, home prices soared. Home prices reached record prices in most markets around the country. And by December 2022, the median sale price for a home is $372,000. So you might see that, and if you're living in New York, Miami, San Francisco, you hear that, and it doesn't sound that bad probably. But take a step back and think about the fact that we have never had a median sale price over $300,000 in U.S. history. So the increases we saw during the pandemic are significant. They were rapid, they were dramatic. As federal monetary policy changed and as interest rates were increased to try and curb inflation, the housing market pulled the e-brake and everything came to a grinding halt. The housing market is often where we see federal policy have an extreme impact. It's where consumers borrow money to purchase their homes. It's where builders borrow money to build their homes. When interest rates go up and it becomes more expensive to borrow money, the housing market slows down. Here's the crazy thing though. Everything we just talked about is accurate. The housing market came to a grinding halt, except prices. Let's think about the logic behind this. Buyers who are shopping for a $375,000 home, median sale price in the United States at 3% interest, have slowly watched their affordability disappear. They can no longer afford that home or really anything relatively close to it at 5, 6, let alone 7% interest. So all of a sudden that buyer who was active and hunting at 375, maybe even up to 400, no longer can afford to operate in that pool. So they're removing themselves from the buyer pool. Housing affordability is a whole different topic. If you're looking to understand the difference between the maximum loan amount that you can get and how much you can afford each month on your home, check out my other video on breaking down the monthly cost of your mortgage so that you can get a better start on finding affordable housing in 2023. Now, normally when we see this, buyers come out of the market, demand slows down, we see prices come down to try and encourage buyers to get back in. But in this case, we have an interesting scenario where sellers are not motivated to move. Many sellers locked in their purchase at a low interest rate, 2.75, 3, 4, even 5%. They have no financial motivation to make a significant change right now. So that product is no longer coming on market for sale. We already talked about builders not building new homes. So now we have a limited buyer pool, a limited inventory of resale homes, and no new construction projects happen. In a market where buyers aren't buying, builders aren't building, and sellers aren't selling, what goes down is the number of transactions. And what we saw was a steep decline in the sale of single-family homes, down 35% year over year. So even though prices aren't adjusting yet, the number of transactions is way off pace from where it was a year ago. Now, what do we make of all this? I think it's fair to assume this is a precursor for prices adjusting. The Wall Street Journal released an article about 4 markets in the United States set for a rough adjustment, 20, 25% or more in their market values. I think that's the exception, not the rule. For most communities, this is going to be a gradual change from where we've come. As buyers, sellers, builders start to get more active in the marketplace, hopefully, we'll see prices level off at a more reasonable place. But I don't think that you're going to see 10, 15, 20% adjustments in most local markets. The data's not there. With that said, thank you for watching. Don't forget to follow me on Instagram if you found this content useful. Thank you, and I'll see you next time.